Hello and good morning. I welcome you to the morning meeting today on Friday, the 9th of March 2018. This is Jens Klatt speaking and exclusively presenting this format to you for JFD Brokers as their global head of research and education. And we want to have a look at the day on which the NFPs are being published, and also have a look at what happened yesterday here. With the ECB and Mario Draghi, so quite interesting reaction in the DAX, especially with initially moving lower, not aggressively lower, but nevertheless wasn't such a big surprise. By the way, first of all, here look at the risk disclaimer. So the DAX pushed lower already in the first hours of trading yesterday, and then the ECB took out the part in their statement in which we could read that they were capable of also moving QE or extending their QE, not extending in terms of time, but in terms of size. And that's all in all something which is on one hand not really surprising. On the other hand, it's nevertheless it's something we can interpret as hawkish, and so the reaction in the market was quite was quite bearish. I mean, let's be careful here, because it wasn't a huge push on the downside, but the DAX here pushed lower, attacked again those daily lows, and then suddenly the DAX just took off, and not just took off, but as you can see here in the hourly chart, broke above a crucial resistance line and region around 270, 300 on the upside. And so while we will discuss the reasons for that, potential reasons for that a little later, let's first of all here have a look at the current region, which is very interesting from a trading perspective, because again, this is the hourly chart. Everything obviously above 12,180 should be considered bullish in my opinion, and now this retest could act as a potential long trigger for engagements aiming to see a push towards 12,500 and 12,600 points probably in the upcoming days. Then, interesting enough, there is a big expiration, so-called triple witching here in the DAX next week. By the way, just let me show you here some stats from the Eurex and the open interest, and that is a little intimidating probably. Let's have a look here at this, at these levels. So currently we're trading here. We're trading at 12,300 points, which is here, and that's not a very significant level, but more interesting, 12,500, 12,600 points. This is something worth watching, I think, because it shows that the potential on the upside is probably not that high, respectively not that high, no. It's not just that here, when looking at the daily chart, that you can see that this region is potentially the resistance line or support, in fact, for this down structure, falling highs and falling lows, which was here potential fake out at the beginning of the week with the bullish divergence forming. But, and this is the interesting thing, I mean, we can clearly see that this obviously also makes or has a quite huge impact based on the big expiration next week, triple witching, so that market participants currently in the option market, are betting that the DAX will make it above 12,500, 12,600 points, but on the other hand, giving the DAX some room to at least reach this region then. And so with this in mind, I think there's a good chance that the DAX will continue its sequence of higher highs and higher lows, which it started to forthright yesterday with the break above 12,270, 12,300 points here. And with this in mind, and with looking at these numbers here, again, the current region is becoming really interesting for at least short-term long engagements. Some traders probably will say, hey, that's probably good risk reward going long against 270 to 80, the region we are currently attacking, having a stop of something like 100 to 110 points lower, and then aiming for 12,500, 12,600 points, probably giving us a risk reward of minimum 1 to 2. So this is definitely a very, very interesting setup, I think. And yeah, again, so currently we are testing exactly that region. You can see also there's not huge dynamic on the downside. All in all, I mean, the overall advantage can be found on the downside. That's due to the fact alone that we are trading below the 50 exponential moving average here on a 5-minute time frame. And usually this is a very, very good trend filter. But, and this is the thing, nevertheless, the risk reward for short engagements here seems a little, yeah, unattractive. Unattractive is the perfect word for this, I think. And I think going short here, if you're trading the breakout of the open range on the downside in the morning, I think it definitely makes sense to become more aggressive with the stop once we reach this region as a potential long trigger here, especially as a in a time frame which is dominating us. The hourly chart is the dominator of the 5-minute time frame. We probably are not that bad off if we are getting a little more aggressive with our stop here, since the chance is increasing that there will be at least a slight push higher. So now, first of all, before we look at the non-farm payrolls, which will be published today at 1:30 p.m. GMT, let's have a look at what happened around the ECB yesterday and why did we get to see such a push higher here in the DAX, while the euro, for example, broke significantly lower from its initial bullish reaction up to 124.50 and then selling off. So the initial reaction on the upside, respectively in the DAX on the downside, was, I think, mainly due to the fact that the extension of the QE program is something, extension in terms of size, is something which is not a topic anymore at the ECB. So that can be interpreted as hawkish. This is usually euro bullish, respectively DAX bearish. Nevertheless, and this is the thing, what I think is very interesting are the comments from Draghi in terms of the protectionism and the tariffs, which are about to become a major topic in the US, respectively, which were brought up already from Donald Trump last week on Thursday, and which resulted already in some bigger volatility and bearish action, price action in the DAX here, and the DAX then attacking 11,900 points and breaking this level on Monday, while then having no trouble of gaining momentum here. It's probably a potential fake out on the downside and no taking off. And so his comments here, even though he didn't come out very directly on it, but it was something you could somehow feel that the ECB is closely watching what's happening there, and they are already thinking about countermeasurements to make sure that if there are any negative impacts on the growth outlook, economic growth outlook of the Eurozone, respectively, fears rising that the US dollar could sell off, and that's why euro, for example, is pushing significantly higher here, which also has an obvious negative impact on the inflation rate in the Eurozone in general. Between the lines, you could clearly hear that Mario Draghi was somehow saying, guys, we have enough tools available to make sure that this has no negative impact at our economy at all, meaning nothing more than we will find ways to get the euro lower. And this all in all is potentially then the reason why the price action presents itself the way it currently does in euro bearish, respectively DAX bullish terms, and how the DAX was capable of taking off that significantly yesterday then. And I think that was also a very strong sign. And if I combine all this, I clearly see the advantage currently to be found on the long side, even though the current market environment does not really justify that. Intraday, we are still bearish. Nevertheless, that could change. And then we are coming to the NFPs that could change at 1:30 p.m. GMT with the non-farm payrolls. I don't think that the non-farm payrolls will be a huge market mover. I don't think so. So probably it will be a non-event and we don't get to see any reaction at all. Nevertheless, with ADP data coming in above expectation on Wednesday already, as you can see here, and knowing, and here we have two lines, the blue one is the ADP and the black dotted line is the non-farm payrolls, we know about this positive correlations between those two here. And data coming in above expectation makes it more likely that the numbers for the non-farm payrolls being published today are coming in above expectation too, respectively coming in at least very, very solid. The current consensus is 200,000, as you can see on Bloomberg in their economic calendar. 1 second. So this is, by the way, data you can get for free, and to get a very good idea of what we are expecting here, respectively, where volatility could enter the market then. So economic calendar, and here employment situation, and there you can see the non-farm payrolls, 200,000 prior, consensus currently 205,000, and the consensus range is 152,000 to 230,000. And with this here in mind, and also with knowing that average hourly earnings are quite interesting, we can, or I would say, everything which comes in above 200,000 plus average hourly earnings coming in at least at or a little above their expectation, 0.3 for example, percent month on month, respectively here 3% average hourly earnings year on year. Everything which goes in this direction is potentially bullish for equities. Why do I say that? Usually you would say, well, rising yields in a market environment which is highly leveraged, look at NYSE margin debt, for example, here, is something which is not positive for equities at all, isn't it? This is true to some extent, even though short term, I think good numbers from the economic data docket here is something which could trigger further bullishness in the US equities in this case, and then also drive the DAX higher. And this has mainly to do with the fact that most of rate hikes from the Fed is priced in the market. So what you know is, and especially after the comments from Jay Powell in front of the US Congress last week, well, we definitely know that there is a chance for 4 hikes. And this is also something which is seen here in the Fed Watch tool, for example. So this is no real big surprise. And yields already rose quite significantly from the start of the year, from January onwards, and we nearly touched 3% on 10 years. And the interesting thing about this here is, in fact, that when the data comes in above expectation, I don't think that there's so much further room on the upside here in yields. That's something we definitely have to take into account. I'm not saying that we don't get to see a positive push in yields then if data coming in positive, no, or above expectation. But I think most of this is potentially priced in, and in fact, and this is the interesting thing, I mean, it's only one data set. It's no big deal. It's like it's the NFPs for February, and so it doesn't change the overall macroeconomic picture. But, and this is the thing, it gives some optimism, let's call it, some optimism to some extent to market participants that rising yields go somehow still hand in hand with a positive economic outlook, positive economic growth. And this is something when where I would then say this is one good reason to think that equities would, if numbers come in above expectation, would react in a bullish way here. And the same is true, by the way, for a data set which comes in below expectation. That could trigger some serious weakness in the US dollar, and could also trigger some serious weakness then in equity markets. In this case, then pushing the DAX significantly back below the level which he yesterday just conquered here, with breaking above 270-300. Currently, as you can already see, a first positive reaction. We are now drifting back. It's no big volatility, probably also because market participants are not really sure what to make out of the non-farm payrolls today. But all in all, I think this is, again, a very, very interesting region here to look at. And as long as we trade above the lows from yesterday, the overall picture is more bullish and has some potential up to 12,500, probably 12,600 points, where we then, by the way, nevertheless should find quite strong resistance zone, mainly because of the triple witching next week on Friday. So now let's have a look here at the Dow Jones. Nothing big happened here, in fact, too. So after the losses last week, well, we somehow made it back. Nevertheless, it's not that we're hugely positive. That could change once we make it above 25,100 points. It's around 200 points from here. That could then lead to a quite positive weekly close. Nevertheless, I still think that it needs a positive NFPs here to get such action going. Yeah, and that's it, in fact. So what about the euro? My personal take is that I don't really like the euro. 1 second, by the way. Okay. So I personally believe, and that's something I mentioned already in the morning meeting, and currently it really looks as if we are now about to attack those lows again. I said that I really don't want to be long at all in the euro anymore. It's not that the picture yesterday took a dramatic hit, but we are still choppy and sideways here. Within the range between, let's make round numbers, let's use round numbers, 122 to 125.26 here. We're still choppy sideways. Nevertheless, currently, I think short term and after the price action from yesterday in the reaction to the ECB, I think the chances are higher that the euro will push down towards 122.20, 121.70 towards this green box, then now taking off here. This bearish consolidation, I think it's a bearish consolidation here. So this structure is not positive and short-term bearish. I think intraday the advantage can be clearly found on the downside. And again, non-farm payrolls 1:30 p.m. GMT can trigger further volatility and a push lower in Euro USD if they come in above expectation. That should be at least short-term bullish for the US dollar here, and could then especially trigger some further losses in the euro, which on the other hand, by the way, is positive for the DAX then, because a weaker euro usually coincides with a stronger DAX. It's not set in stone, no, but nevertheless you can see this tendency here in the markets. So that's it on the Euro USD. Let's have a look at dollar Japanese yen. Also very interesting to watch once we're coming closer to the non-farm payrolls based on the yield sensitivity. Nevertheless, the thing is that again, as for equities here, I think it's difficult to see a sustainable move here. I think nevertheless short-term volatility and with NFPs coming in above expectation, if so, could trigger some further momentum in dollar Japanese yen, which could push us as high as 107.50, 108 on the upside. So I think it's a quite good reaction, short-term at least, against 105.50 here. And currently it looks as if dollar Japanese yen can really make it to this level. Potential trigger again, non-farm payrolls, 1:30 p.m. GMT. If they come in above expectation, this could trigger, even though it shouldn't necessarily mean a huge spike in yields, but nevertheless could trigger some further momentum here, which is bringing us at least above 107. For gold, very interesting, I think. When talking about dollar Japanese yen and yield sensitivity, well, you also have to talk about gold. I think it's very interesting that after the resignation of Cohn here, gold nearly gave back all the gains from Tuesday when we attacked the region of 1,341 USD per ounce, which is, by the way, for me at least, a short-term significant level, which here plays a major role if you want to make it back towards, in the near term at least, towards 1,360, 1,365. Now we have given back all these gains and currently are turning red for the week. But the interesting thing is, it doesn't change my overall positive picture. So in fact, if non-farm payrolls also today trigger further weakness in gold by coming in above expectation, this is usually what you would expect, I could imagine gold probably to keep on moving lower and probably in the not necessarily today, but in the upcoming days here, make a run down towards 1,300 and probably slightly below that level. But nevertheless, I still consider the region around 1,290, 1,295 as a potential long trigger for at least a try. Give it a try to anticipate the break on the upside. And I still consider 360, 365 to be a crucial level long term. If we make it above that, I think gold has serious potential for the upcoming months then to make it up towards 1,700 USD. An idea could be that you try to anticipate such a break with a first small long position in gold and then take on a second position here, or pyramid an existing a positive performing position here once we break above that level. And so I have to admit that I'm not that unhappy to see this move currently in gold, and I really hope that there will be good NFPs, and in fact that I'm not wrong here, and that gold will push towards 1,300 USD, because this is making the risk reward for long-term gold engagements here anticipating or trying to trade a break above 1,360, 365. It makes it more attractive, and that's one reason I'm again not really unhappy to see that. Yeah, and so that's it from my end. I wish you happy trading. Watch your stops. Have a nice weekend. In fact, it's Friday. Have a nice weekend. Take care. Be aware that 1:30 p.m. GMT we have the non-farm payrolls, and yeah. So all in all, that's it from my end for this week. Next time we can talk to each other, it will be Monday, 10:30 a.m. GMT. Tune in, subscribe to the YouTube channel from JFD Brokers if you haven't already, and talk to you on Monday then. Yeah, have a nice weekend. Take care. See you, and bye-bye.